What is up, everybody? Probably a long overdue video. I've been asked what my opinions on footprint is 100 million times. I've been asked, what are your opinion on footprint? Can you do a video on footprint? Footprint. What do you think about the footprint? Okay, so full disclosure, I've been using the footprint since, I don't know, either December or November of 2020, so I haven't even been using it for a full fucking year. And my opinions and the way I use Footprint is going to be wildly different than the other shit you're going to find online, okay? So you have to realize going into this video, it's just going to be a complete, unique, different experience. So I'm going to talk about some things about it that are kind of controversial. Some idiots out there are probably going to get upset at me and comment down below. So for those of you who decide to do that, you can go fuck yourself, letting you know right now. Um, yeah, so this is not going to be like other footprint videos out there. And I'm going to show you two trades using the footprint. I'm going to show you a return to value trade and a breakout trade with footprint. Okay, so this is a footprint. For those of you who know that this is a footprint, we can agree it's a footprint, right? Because I'm about to drop some knowledge. I'm about to drop some shit on your head. For those of you who don't know what a footprint is, this is what it is. So each one of these bars are 30 minutes. Each one of these bars can be custom tailored. You can do a footprint that is literally, let's do 1 minute. It's going to look like shit. Let's do 15 minute. So those are 15-minute bars. So think candle bars, candlestick charts. It's the same thing as a candlestick chart or a bar chart, but it's showing the volume within each of these bars. So that's how you want to look at it. So let's just kind of zoom out. You're not going to be able to read the numbers at this point, but if we zoom out a lot more, you can kind of see that it looks like a fucking cluster of shit. But anyways, so all this is volume. So all this is essentially market orders hitting the market at specific prices, okay? So here's the thing. For instance, right down here, it's 32 versus 0. Let me make this bigger. Okay, so 32 sellers hit, the market ticked down, or the market didn't tick down, and then 22 buyers hit, and the market ended up ticking up within this bar. Okay, so the bar opened up here, signified by this red line, and closed down here, kind of like a candlestick. Same thing with this blue bar, open down here, close up here. Not every footprint is going to be like this. Not every footprint is going to have colors like this. Footprints can be created drastically different, okay? They're highly customizable. So you need to think of the DOM. For those of you who are not familiar with the depth of market and how market orders are hitting bids and offers, it's staggered. So your bid is going to meet your offer. So you would have 32 hit while on the sell side while buyers are hitting with this 22 on the buy side. Meanwhile, over here, kind of just picture that there's an offer sitting there. Same thing over here, there's a bid. So as the market's ticking up within this 30-minute time period, you can get to know, you can see what the volume is doing. People who do footprint analysis, they like to read these numbers, and that's how they read order flow. This is another method of reading order flow. For me, I always thought reading order flow was literally reading depth of market and tape. That's not the only way to do it. You can do it this way. I do not read these numbers. Okay, so this is kind of where things are going to get wacky. I don't read these fucking numbers. Some people will read these numbers and they can see if there's a large buyer or seller absorbing in a specific area. Some people can see where buyers are coming in. It's an easier way for some people to visualize order flow. For me, when it's coming in on the time and sales, that's the way I consume order flow. And I can remember what's going on with the way the orders were coming in on the tape. And for my style of trading, that's That's the way I do it. Now, the problem with using footprints is you don't get to see the limit orders. And I think being able to read the limit orders on depth of market is equally as important as the market orders that are flowing in into the market through the tape. Preferably, I prefer looking at order flow through the tape because you can see how much size a specific trader is putting into the market. Whereas when you're looking at a footprint, you don't know if 71 of these was, like for instance, this 71 here, you don't know if that was just one large buyer or if that was 71 one lots that hit. To me, that's important information. Um, so keep that in mind. So this is a footprint, and I'm trying to figure out how I want to approach this shit. So we all agree that this is a footprint, right? Let me go ahead and go down here. Now, on a lot of footprint charts, you're going to see these types of things. All this is delta. I did a video on deltas. Fuck, I don't know how long ago. It pissed a lot of people off. But anyways, I did a video on delta. You probably don't want to watch that unless you want my fucking opinion. So this is delta per bar. So per 30-minute bar, this is showing you how much delta is within it. So right about here on this bar, the delta went negative. So there's slightly more sellers coming in on this bar. Right here, this is delta for the entire day. So this is measuring the delta again for the entire fucking session essentially. Whereas this is just delta per bar, and this is volume like you would see on a normal volume histogram, except for it's volume per bar. People like to take that information and try to make sense of it and trade around it. Okay. Here's the thing: when you're looking at charts, footprints, order flow, um, it's like speaking another language. It has to make sense for you. And there's just not one way of doing these things. So for those of you who I'm probably going to piss off, just realize that there's no one way of doing things. So anyways, again, we can all agree that this is a footprint, right? So this is taking the bids by the sellers by the buyers. So it's essentially split volume, right? So with these little histograms that it draws, it's showing how many sellers are hitting on one side versus how many buyers were hitting on the other side. As you can see right down here, there was a lot more sellers hitting. Now keep in mind, this changes colors between light blue to light red to dark blue. So don't think that it's based off of who's hitting more in a specific area, buyers or sellers. So don't think just because you see red bars right here that it's strictly just sellers hitting right here. It was more so sellers were hitting heavier at this specific price of $39.55 even. So it turned red. If more buyers were hitting like they did up here, the bar would turn blue. But you need to look down the center line of this footprint, and the volume bars on the left are measuring how much volume sellers are hitting, whereas the volume bars on the right are measuring how much buyers are hitting. All it is taking these numbers and just kind of making it visually easier to see. Because if I was to take away those bars and it was just numbers, it would be, in my opinion, a lot harder to fucking comprehend. So yeah, so you can see more sellers are hitting down here than buyers are hitting up here. So the market is more selling imbalanced, if you will. Okay, so like I said, you can change these things up. You can customize it. So one thing I can do is come in here and I can go up to this and do this. Now it's plotting the volume bar all next to each other like a volume profile. Okay? It is literally, instead of splitting the volume left and right, it's putting all the volume together and it's drawing the volume bars. Now your bids and offers are still split. You can see it's still 32 by 0. So before I did what I just did, all these numbers were exactly the same. The only thing that changed was how these bars look. Now they're essentially volume profiles. In fact, I can go in here and I can do this. Now it's combining all the numbers. Now it's no longer splitting the bids or the buyers and the sellers. Now it's combining everything. Okay? Now I'll just do this. Now I take away all the numbers. And this is how I like to look at footprint. So for those of you who want to know how to read the numbers within the footprint, this is not the fucking video for you. So for those of you who are curious what the hell I'm doing, let's carry on. So here's the thing. All a footprint is a volume profile. That's all it is. It is the exact same thing. So these are daily profiles. This is the regular trading hours, and the blue ones are the overnight. Okay. Now I know on Sierra charts it looks like the overnight has a lot more volume that traded in it. This is an optical illusion. That's simply not true. It's just the way it does it for some reason. So a volume profile is the same thing as a footprint. The only difference is a footprint, the way people like to look at them is by splitting the buy volume and the sell volume, like I showed you at the beginning of this video. And a lot of people like to have the histograms going in two different directions. I don't like to fucking do that because it's harder for me to like comprehend it. So I like to do this, and I like to look at just the shapes. Do you notice anything familiar in here? This is a nice bell curve. This is a D shape. So for those of you who are not familiar with auction market theory or profile shapes that signify imbalance, this video is going to not make much sense from this point forward. I have a video on auction market theory, and I have very old videos on how to read volume profile. Totally outdated, but you can probably catch the gist in those videos. So that tells me this is neutral. So I'm just looking at the fucking shape of it at this point. This tells me this is neutral. Okay? This profile right here tells me it's slightly imbalanced. Notice how it has a long tail on top and it has the bulk of the volume down here. So that tells me this is imbalance and the price might need to go lower as it's pushing down here. Okay? And then the price ends up building out a neutral area and it ends up floating sideways. This profile is slightly imbalanced at the highs, but it doesn't quite go up there yet. Okay, and we're looking at the overnight session, so looking at these footprints is kind of like trickier. Like here's a good example. The footprint, here's a nice D shape right here. So this is perfect balance. And keep in mind, these are, is this 30 minutes? Yeah, this is my 30-minute footprints. I like to run footprint on 30-minute intervals. Okay. It's kind of like a substitute for TPO, in my opinion. Time price opportunity. It's basically a market profile with letters if you're not familiar with TPO. TPO is generally done in 30-minute increments, so I like to run a footprint in 30-minute increments. And typically, at the top of the half hour or at the top of the hour throughout the session, unique things happen. For instance, 30 minutes before the close, you're typically going to get an influx of volume. An hour before the close, the bond markets close. I forget what time the European session closed, but sometime in the morning at either the top of the hour or the top of the half hour, the European session closes. A lot of profile traders like to measure the first 90 minutes for initial balance. So, and I might be talking about advanced things some of you guys don't know. So I'm sorry if I'm doing that because we got a lot of shit to get through here. But So I like to run these things 30 minutes because every time the half hour or hour rolls over, volume will and can shift exactly uh, to the dot. So that's why I do 30 minutes. Some people do footprints on 5 minutes. Some people do them on ranges. So maybe they don't want a new footprint to form until like 16 bars or 16 prices have been traded. So that way you don't have a fuckload of these sideways profiles and new ones constantly printing. Anyways, right here you can see the profile is perfectly neutral. It's a nice D shape. Um, Volume profile, in my opinion, is awesome because it always does this. At some point, these bell curves are always made. And you don't need to see these bell curves on just a 30-minute chart. If there's enough volume, you can see them being formed on 5-minute footprints. Okay? But anyways, after this neutral area is formed, it's starting to create a tail here. And the point of control, which is this largest bar right here, shifts. So the point of control was at 34 even. Now in this next 30-minute time period, it shifts down to 33 even. So this is what I would call imbalance. There's more volume trading at the lower side. It does it again, highly imbalanced. What happens? The market ends up shooting the fuck down at some point. Yes, it trades slightly higher, but on not very much volume, and then the fucker just dunks in and it comes all the way down here and starts to find value. Okay? So this is a great way to find balance, imbalance. Um, so that's what a footprint is. It's a volume profile. Now we're about to get into two trades. I don't really have much else to say about a footprint other than I use it like a straight up fucking volume profiles, 30-minute volume profiles. Again, they're the same thing. Now it's important to read order flow. If you're struggling to read order flow through the depth of market or tape, which is a skill, um, you might want to adopt picking it up by reading it through the actual footprint itself. I know quite a few traders like to do that shit. Hold on real quick, guys. Give me just a second. So I know a lot of traders like to do that stuff. Um, kind of like how I had it in the beginning of the video. They like to read the numbers, and that's how they consume order flow. Again, if you're doing that, I think you're kind of at a disadvantage because you're not actually reading. You need to look at the limit orders on a depth of market. And also the problem is you're not seeing exactly how much size one specific trader is putting in. But you can still make decisions off of it. People do it all the time. Again, there's not one way to do this. So essentially everything I do with volume profile, I do it with footprints. But it's kind of like what I like about it is I do multiple time frame analysis with profile. So that's a style I've really adopted and I like. So let's go ahead and look at this. Um, so I have the footprint overlaid on my heat map. So you're not going to be able to see the heat map back here. But over here, this is the same fucking shit. This is a footprint. So if you look at all my older videos, not all of them, but more of the recent older videos up for the maybe past year or so, you'll see this. This is also a footprint. The footprint on the Jigsaw DOM, the only difference is it's not being reset. Um, it's not doing this where it makes a new bar every so many minutes or whatever. It just goes on forever and you can manually reset it. And these market orders you're seeing come in right here are literally the same market orders that have always come in on the center of my DOM. Notice how there's 33 and 9 down here. You're seeing the same shit, 33 and 9. It is the same way. It's just a way to historically keep track of those market orders that have came in. However, volume profile is another way to do that. So this right here is a composite footprint. Um, this is a footprint from the last, not a footprint, this is a volume profile from the last 3 years, I think. However, currently where we're trading, we're near these highs that haven't been traded for the last 3 years. So a lot of this might be several weeks of volume data compiled. And it's just a large, seamless volume profile. I like to look at it because I can kind of figure out where bigger players might be stepping in. Um, and I like to look at these 30-minute profiles or footprint, if we're going to be politically correct here, for smaller time frame analysis. And I'm looking for specific things to align with themselves when I make decisions. But I'm not here to like get into my style and the way I trade. Otherwise, this could be a 10-hour long video, if not longer. So anyways, so this first video is going to be a breakout trade. So here we can see this footprint is all formed up. Notice it has a long tail and it has heavy volume near the base. Okay, it looks like a lowercase b essentially. Kind of the elementary approach of looking at profile uh, is a D shape. This is a D shape. That means neutral. That means the market's within balance. If it's a B shape, that means it's bearishly imbalanced. If it's a P shape where the volume's on top and it has a long tail on the bottom, kind of like this one, then it's bullishly imbalanced. Does that necessarily mean the market is going to continue in that direction? No. And you're going to kind of see that within this example. So this is like a lowercase b shape. B as in booyaka. So I'm sorry. So, but let's break down this profile further. If you look right here where this low node is, it's perfectly balanced. It's like a D shape. If you look from this low node up to this low node, it has another D shape. It's perfectly balanced. If you look up here, it has another D shape. It's perfectly balanced. So theoretically, there's 3 distribution zones where the market found balance within here. However, the volume is heavier down here, and it progressively gets heavier as it hits each 3 of these distribution zones. So what I'm looking for is a breakout to the lows. So the market had been trading down here in this specific area, and you can see that on the bar chart. You can see how it's all kind of sideways right there. Hopefully you can see that. And that made it look like this. So what happened is the price shot up somewhere up around here, and it's coming back to this low node. So I'm looking at this low node as sort of an entry point to short the market. Because if it's going to start to go back into this distribution zone, it should break out. So I'm basing my decision off of several things. I'm basing my decision off context. Where has the price action been? So where has the 1 minute chart, which this is a 1 minute chart on a 3-year volume profile composite, FYI. So I'm looking at these 1 minute charts and I'm like, where have these 1 minute bars been trading? I need to know what's been touched, what's been rotated, what's been chopped, what's been pivoted. Okay. Then I look at this and I'm starting to build out context with this. So we have 3 distribution zones, heavier and heavier volume. If we look at the picture as a whole, it's bearishly imbalanced. Also, where this low node is sort of where nothing traded within that last 30-minute period. So this is sort of a low noded area too. Now, if you go back an hour, again, 30-minute bars, we're kind of in the middle of this range. That's sort of old news. That's old information. It's not as valid because the people who played their hands, and I'm kind of looking at fresh new order flow to move things. So, which I kind of self-contradict what I'm saying because this is a large composite profile, so this obviously has a lot of larger orders in it. or older orders, I should say. But again, this is bigger picture context. So what I'm essentially doing is I need to do a fucking video on context first and foremost. So understanding what's really going on and how the order flow is interacting on certain prices within this footprint really is painting a picture in my head, and I'm trying to make a trading decision based off what's been happening and where I think the market will go. Um, Context is so very important. When I scalp, I'm not just scalping to scalp. Sometimes I do, but most of the time I don't. I'm looking at all this stuff and I'm trying to figure out context, setups, essentially. So let me go ahead and play the video. And somebody said this is really hard to see. You need to be on a computer to see this shit. Because if you're trying to watch this on your cell phone, this is going to be fucking impossible. So see this dotted line here that you probably can't see? This is where the price is currently. So it's at 07 even. You can see 07 even right here. So what I'm doing is let's watch the footprint. The bar is now on the low node. Okay. We've had a lot of selling going into this low node. So we're getting stuck in this low node. And if you look at these 1 minute bars down here, we already have been trading above this low node. Now we're coming back into this low node on the footprint. So I'm hoping that we can trade this distribution zone. So I'm trying to get into the trade a little bit early for the breakout of this distribution zone. So it's above that low noded area. It's not going up on much buying at all. The market is actually very thin, so it's not taking much to move it in this current example. So the market just gets blasted down. Now we're on that low node again. So let's see if it's mid-size orders that blast it down. Not really, mostly retail that just blasted it down. So if retail's blasting the market down like that, that tells me the bids are pretty fucking weak. So now I'm looking to take a trade. We're just below this low node on the footprint. It's very hard. I'm kind of chasing it a bit. You can see I'm in it. So now it's staying on this low node. So I'm hoping this low node, which is, what is that, 0650? Or, oh, yeah, about 0625, 0650. This is the low node on this footprint. Okay. So I got good selling coming in. The market's tweaking back up. You can see it's in that low node. Almost stops me out. Oh, looked like it did fucking stop me out. Either I cut it or it stopped me out. So I ended up going back for it because now it finally sinks back into it. Now it's right on the point of control. Now it's blasting the point of control. So you can see now it's on the point of control. Now we're within this value zone. We're finally in it. Now here's the thing. Typically, the point of control can reject the price. So I know there's a probability of this 05 even rejecting the price and the market can just go up. So even though this is bearishly imbalanced, if the buyers are heavily absorbing down here, then this is the opposite of being a bearish imbalance. If you have buyers heavily absorbing and it makes the profile look like this, then the context of that is so different than what it is now. I don't have buyers aggressively absorbing. And I know this based off this order flow coming in, based off the Time&Sales. The Time&Sales has a lot of red orders, right? It's pretty intermixed. It has blue and red orders. So I know buyers aren't heavily absorbing right now. So this is just a mix. This is being formed off a mix of buying and selling. Now, if it was just buyers absorbing the shit out of aggressive sellers, that would mean something completely different. So this footprint can mean completely different things based off the order flow. So now I'm in it. Now I'm hoping it breaks the bottom of this curve. I know it could hit the bottom of this curve and come back in. So I have to just be ready. So it's kind of hitting near the bottom of the curve and bouncing a little bit. But the fact of the matter is this blew through that point of control and it didn't get hung up on it. So that's a good sign. So I'm pretty confident in this setup. And also, if you look at the 1 minute chart, you can probably barely see it, but on the 1 minute chart, we bounced down here like 6 times maybe. So that's called a poor low. And what that means is there's a bunch of buyers trapped there. So this should, if we keep pushing down here on, what is that, 03 even, this basically the bottom of this footprint, there should be a puke. We should see somewhat of a stop run. There's the stop run. So let me rewind it. So pushing on this 03, there's your stop run. Not the greatest stop run in the world, and I go flat. So that trade more than paid for the loss I took getting into it. So now you can see that the market just really isn't going down. So now it's kind of like getting stuck here. This is where the composite comes in clutch. Notice there's a high node here. There's been a high node here. So I know there's bigger time frame players that are trading this area. And we're really close to 000, 3,800 even. So that's a psychological level. That's a century figure. So naturally, you're going to have larger players here that are going to continually play this, like large traders. So this is getting absorbed and all that bullshit. And the market's ripping up on nothing. So essentially, these offers are weak. There's a little stop run, but sellers are not really sustaining the move. Look how it's just kind of getting stuck here. And it's just creeping back in. And I think it eventually goes up over time. Let me see. Yes, so it only went down there and it eventually started ripping up, you can see. So it didn't quite get the breakout that I would be hoping for on it, but it did break out a little bit. Just the order flow wasn't there to sustain the move. So let's go ahead and look at another video. This is return to value. So what you're looking at here is essentially a large neutral area. Okay? This is basically a large D shape. Let me actually do something. Give me just a second, folks. I'm going to swap that over there. Paint. I'm going to pull up paint. So, give me a second here while I do this. So this is a neutral profile, right? D shape, point of control. Sometimes profiles will look like this. This is also a neutral profile, okay? It's what you might want to call trimodal. Tri as in 3. There can even be profiles that look like a set of tits. Sorry, ladies, if there's any ladies listening to this. This is bimodal. So it's all neutral, essentially. This more so these two would be your neutrals. This bimodal, it's kind of a little weird. But since there's 3 here, 1, 2, and 3, and if it's shaped like this, it's essentially neutral. So this is what we're seeing in this case. It's trimodal. But essentially, we need to look at the bigger picture, and the bigger picture is this is fucking neutral. And this is right on the open, too. What time is it on here? It is at 8:59 Chicago. So within the first 30 minutes, we have this huge neutral profile. So what I'm looking for is not a breakout. I'm looking for a return to value. And if we look at this fucking composite, we're near the like look, there's the major distribution zone would be down here, and then the composite profile sort of tapers off. And right in here, I would say is about the ragged edge of it, the tail. And if there's just not enough volume, there's a high probability of this thing pulling back to value, which value is your point of control, where the most volume trades. That's fair market value. So I'm looking for how high is the volume flow up here, and I'm going to make a trade based off of that. So it's either I'm looking for a breakout or a fade. It just depends on how the volume is looking up here. So this is going to end up being a fade trade. So we're hitting up here, and previously we've had large buying. The buyers just really aren't there. Notice that when this 20 lot came in, the market fell like 6 fucking ticks. Watch. Watch on the tape when this 20 lot hits. Is this in 1080p? Yeah, sorry it's so crusty. As soon as that 20 lot hits, nice little spread right there. I'm going like frame by frame for that 20 lot to hit. Give me just a second. I'm pretty sure that 20 lot hits just. The second, you have to be, there it is. So your 20 lot's hitting at 30.75, so right there. Watch how the market just dunks in. So essentially, as soon as that 20, yes, there were other sell orders, but as soon as that 20 lot hit, it kind of lit the fire to where the market just fell in. That tells me buyers aren't confident, the bids are weak, and buyers have a shit defense. So even though they are buying a lot here, if I have a 20 lot get in the market to drop down that many ticks, often, like that, that tells me buyers don't have a good defense here, and this has been overbought essentially. So now we're into the next 30-minute cycle. You can see we're building a new footprint here, but I'm still making decisions based off this footprint. So there's a lot of context you guys are going to be missing. This is more of a specific setup that I simply can't explain. This is just an example of price returning to value. So I go short there, and it's based off of all these other factors. First and foremost, we have been getting stuck here for a while, and we've been trading up here, and it just really wasn't doing shit. And then it just starts falling in. So it's returning to value. I'm hoping to get out at this point of control, which is 23 even, which is way down there. So just kind of let it pan out, because I know you guys like to watch these fucking trades. I think I scale out half right here. So I'm actually looking at this composite. I'm looking at this high volume edge for a target. So at this point, it's not really the footprint. Or I go completely flat on it. So I ended up going completely flat on the deal. That was a really nice trade. And the price, I think the price will continue down. But you can see now it's starting to build like a little D shape right here and another one up here. So it never quite made it down there. You also have VWAP in the way, so there's like structure kind of getting in the way of this. Let's see, I believe it actually continues to run down. Or does it not? No, it ends up going back up. Now it's starting to go neutral right here. So these things are never exact. It may or may not go all the way to target, but that's sort of the rough way of using it. Obviously, within these trade examples, I'm not relying solely on a fucking footprint. Because trying to do that doesn't work. And my template for this footprint is from Axia Futures. In case you guys aren't familiar with them, Axia Futures has a great YouTube channel. You're probably going to get a lot more out of footprint reading from those guys than this. But I noticed that when I was putting their template into my Sierra charts, they mentioned that footprint isn't really a system. It's something that aids a system you already have. And I've tried to use footprint before. I really had a system and setups, and it never really seemed to work for me. But when I layered it on top of what I was doing now, it certainly helps. Don't know if that's true. Some guys trade straight off of a footprint, and that's all they do. That's fine. You need to figure out what works for you, but that is sort of my rudimentary uh, footprint video that really isn't even a footprint video. It's just 30-minute miniature volume profiles. But in my opinion, they're the same fucking thing. They're both measuring market orders hitting into the market. The only difference is a footprint traditionally splits the buy orders and the sell orders, where a volume profile totals all the orders. And if you look at a daily chart, this volume histogram is literally the fucking same thing. The volume histogram that comes on every fucking charting package. It's like literally one of the first indicators you have. It is the same thing. It's measuring market orders over time, where a volume profile measures market orders over price, where a footprint does the same thing, but you can take it a step further and split the buying and the selling volume. Now, personally for me, I'm not. For me, it just really doesn't. It just splitting the volume, and yes, I know I have it on my jigsaw, and that's just to kind of take up space. But for me, just reading split volume is a lot more difficult. I can see absorption without it. Like there's some down here. It's 2,129 versus 1457 on that specific price. Now, theoretically, you should be looking at it from a staggered perspective. That's one way to do it, is because that's how the DOM is, right? The offer is above the bid. So, I mean, you're seeing more buyers are hitting here than sellers are hitting here when the price is between these, when the market is between these two prices. However, I also want to look at it at the same fucking price because I want to know, are buyers more aggressive about this price than sellers? But the thing is, if you get good at reading time and sales and your depth of market, you're going to see absorption on your depth of market. Like if I see this 21 lot and I'm seeing 50 bid hit, 50 or 50 buy hit, 50 buy hit, 50 buy hit, and this fucker keeps reloading, that's absorption. Okay? And here's the problem with um, an issue with footprint is it's older orders. And if you're using just a footprint, it's great for context and trying to get yourself into a position. But in the end, you need fresh orders to move the market. Okay? If you don't have fresh orders moving the market, then none of that shit fucking matters. None of that shit matters. All those old orders there don't fucking matter unless you have fresh markets hitting the market. So you can read the volume on these footprints and you can look at all this historical volume that's come in, but if you're not really looking at the hard right edge and you're not really paying attention to order flow, the time and sales, as the orders come in, I feel you're going to be at a slight disadvantage because you can have these great footprint setups, but they don't mean shit unless you have fresh orders that are coming in and working in your favor. And the speed of tape is just as important. I think the speed of orders flowing in is just as important, if not more important, than actually trying to read these orders. Reading these orders is good and shit, but actually knowing the pace at which this time and sales is printing is hugely beneficial. If I have more orders coming in at a price where I think there's going to be a breakout, that's good. However, if it gets to my breakout zone and the orders start to slow down and they're just not coming in, that tells me it could fail. There's just not enough aggressive people to push the market in my favor. Kind of like that first trade we looked at, that was a breakout. It just did not have enough aggressive sellers to sustain the push. Buyers were pretty much reloading on specific prices. Now, you're going to always have absorption. I think that's another topic for a different video. You're always going to have absorption at pretty much every price. I mean, just look at these footprints. That's why they're shaped the way they are, because the market is bouncing up and down, up and down. However, seeing where fair market value is and looking at the imbalances and is it neutral, is it not neutral, I think building context based off of that is pretty important. So, I don't know. I'm just kind of talking out of my ass at this point. But that's my footprint video. Love it, hate it. That's how I fucking use it. It works great. But I'm not using it the way most of you probably want to learn how to use it, because maybe for some of you just time and sales is too much. The depth of market is too much. That's a skill, and it takes a long time to be able to do that. So I think it's important that you work on that skill, not just look at a footprint. If you're going to look at a footprint, at least have your DOM up so you can be looking at the limit orders. Because if I have some weird large order sitting somewhere, I can't fucking see that, because that could be fucking the market up, and I don't realize that because that's just information I'm missing. But anyways, I think I'm done at this point. Now it's just becoming a rant. All right, you guys have